Hello investors, I am Jaafar, financial analyst in Golden Brokers, and I would like to present to you today the reasoning behind the decline of Alibaba for almost 2 years now, and what we can expect in the future for the e-commerce giant. Alibaba announced lower profit the past quarter, but maintained steady revenue growth, showcasing how the strict control imposed by the Chinese government on major Chinese companies have adversely impacted the company's activity. But before talking about the reasons that affected Alibaba, let's check out the reasons behind the huge success of the Chinese giant. Firstly, Alibaba provides services mainly to small enterprises and individuals. This allows the e-commerce platform to act as an effective medium, benefiting from a unique business opportunity. It provides small enterprises with stronger buying power and offers a wide variety of consumption choices for consumers. And looking into its profit model, Alibaba has a unique one. It charges for its services in marketing and technical support instead of for registration or use. This contributes to a robust market share made up of loyal customers. Another reason is that Alibaba provides exceptional customer service for its consumers. Their offerings provide an environment of mutual trust and positive online customer experience. This leads to high user engagement for the Asian market leader. Lastly, both buyers and sellers on Alibaba platforms are requested to pass an online certification test to verify their identity, either as a business or individual. This minimizes illegal and illicit transactions, as sellers are supervised on the platform at all times. Such initiatives allow consistent business activity as they raise the credibility of Alibaba. Now, let's look into the strengths, weakness, opportunities, and the threats of Alibaba using a SWOT analysis. On the strength side, Alibaba provides an array of services in the business to consumer, business to business, as well as consumer to consumer spectrums. This allows Alibaba to be an effective middleman for most transactions on the e-commerce market, capturing profits from all sorts of areas. Alibaba's has a worldwide reach, with its main clientele being the Chinese population, which is the largest population on earth. This provides the company with an opportunity to consistently generate revenue at a large scale, should they be effective in their business. Another strong point of Alibaba is that many businesses use their platform. Such heavy reliance on the Alibaba network means that its consumers are incredibly entrenched in the Alibaba ecosystem. Moving on to the weaknesses. Manufacturers are quick to copy a successful product in general, as there are several alternative products for Alibaba's offerings, presenting them at a cheaper price. Also, Alibaba's revenue streams mostly come from its e-commerce platform and the Chinese marketplace. Since its revenue isn't very diversified, this exposes the company to the risk of new contracts coming into the e-commerce market, which can effectively compete with Alibaba should they provide desired product at lower price. Alibaba can benefit from several opportunities. To name one, it can capitalize on the global rise in demand for e-commerce, both from the business and individual side, especially after the COVID-19 pandemic. They can provide more product and services which target different market segments to take advantage of such surge in demand. as more people turn to e-commerce as their means of trade and access to retail. Another opportunity that Alibaba can capture is through the rise in digital marketing, which has been the most effective over the recent years. Since the e-commerce infrastructure is becoming more and more competitive, Alibaba can increase its presence in the digital world, such as in the social media. Moving on to the threats. China is facing skilled labor shortages as the nation is focusing more towards high-tech industries. Such a threat can limit Alibaba's potential in operations and hence profits. Another imminent threat looming on the e-commerce king is the trade wars between geopolitical regions. Fewer trading volumes will negatively impact Alibaba profitability, as it lessens the potential of B2B and B2C operations on an international scale. Let's examine Alibaba results in the past quarters. Alibaba's earnings per share for the past quarter was 2.16 compared to the 1.74 expected. So we can see some improvement in the aspect. Also, their revenue in the second quarter was $247 billion, which increased by more than $22 billion from the first quarter. This is a good sign for Alibaba, despite the negative outlook it portrays over the last 2 years. Looking at the performance of the e-commerce chief, it's quite clear that the company is in heavy downward spiral over time. In 5 years, the stock price dropped 25%, around 44% in 1 year, 34% from year to date, 35% in 6 months' time, and 2.5% since last month. However, Alibaba has some positive fundamentals, so let's check that out. From the health perspective, Alibaba is financially healthy, with an Altman Z-score of 4.0, indicating Alibaba's safety from bankruptcy at the moment. Regarding profitability, Alibaba return on assets is 8.75%, which is among the top return in its industry. On the growth side, Alibaba shows a solid growth in earning per share, growing over 20% over the past year. Finally, Alibaba's stock is considered quite cheap, as its price to earning ratio is 29, which is cheaper than 82% of competing firms in the same industry. But what about the technical of Alibaba? From a technical perspective, it can be seen that both the long term and short term trends give a negative direction. The support zone is at $157, while the resistance zone ranges from $160 to $170. Alibaba's performance is weak compared to competitors, with 96% of all stocks performing better. Even so, the price is considered cheap, presenting a good entry point. And now the main event. How does the future seem for Alibaba? First, let's see what the e-commerce giants plan for its own future. It's planned to invest 1 billion across the Asian Pacific region, which will mark the largest investment in the record book of Alibaba in the current year. In specific, Alibaba plans to launch more data centers across Asia, as it recently launched its third one in Indonesia, which will provide businesses with a one-stop shop for all their IT and capacity requirements. However, such plans may not come into fruition due to the economic rebel of the Chinese economy, and may this allow Alibaba to get back on its feet. Credit is rising in the Asian superpower in an accelerating manner, with an overvalued Chinese yuan and an unstable house market. If such trouble persists, there could be significant consequences for foreign trade, financial markets, and economic growth not only in China but also across the world. And in the end, thank you all for joining me today, and I will see you next time.